All right, welcome everyone to episode number 27 of the Wide Lens podcast. I've got Matt Rigby here.
I'm back again.
And we're going to cover the latest topics in financial markets. And we're going to kick off, we are recording this on Friday, the 12th of August. And there's just a positive vibe in town today, I reckon.
It's feeling good. People are happy, optimistic.
Feeling good.
Winter's nearly over.
Markets are roaring back. Let's get into Matt's market min and we'll cover all of this today.
All right. So the ASX 300 over the last 5 days up about 1.5%, down 7% year to date. We've had a few earnings this week. The following companies beat. Telstra down 1.25%. QBE up almost 6%. MGR, which is Mirvac, up about 3.33%. CBA down just under 1%. They beat only just. And GNC, who I've completely forgotten who they are, but I'm sure, Grain Corp, that's right, up just under 6%. I thought that was interesting given what's happening in Ukraine and Russia. The following companies missed. AMP, no surprise, down about 1%.
Has AMP just been like a dog of an investment ever since IPO?
Out. Well, what did they IPO at? $17? Jumped up to 40, 25, 45? I don't know.
$13.
Right.
It's actually, I reckon that's just the worst chart you could. It's basically the inverse of what the stock market's supposed to do. It just starts high and goes just down.
Yeah, not great. Anyway, so they lost money again. I think it was. I can't even remember. Santa Barbara down 14%. Megaport down 2%. No, I think they should be up actually because they rallied on short coverings. So they got about 8% short, 8% of their stock is short. So they were down, but they rallied hard. They were down well into the
they were
announcement, and they rallied hard out of it. So realestate.com up about 2.5, some really good guidance there. Domain up about 7%, NAB down 1%, business banking is really their main driver in CBA.
Was there any highlights out of REA and Domain?
Yeah, there were. I think they said that things are sitting on there a little bit longer, but they're optimistic about what the rest of the year holds for them.
Because don't they make money by people listing stuff?
Absolutely.
Aren't listings down? That's just weird.
I don't know. Coming into I think listings were popping up coming into spring. I think there was a little bit more. I think.
Okay.
Maybe I should read this stuff a bit more. A bit more detail. So NAB down 1%. CBA is coming after their business market. That will be interesting. And Suncorp up about 2%, noting that they were pushing through some really big premium price rises. They're coming through. So I can't remember their brands. I think Allianz is one of theirs. So you might want to check your policies against competitors. BHP starting off Monday morning with a big announcement, making an unsolicited takeover offer for Oz Minerals, which is up around 38%. BHP is up about 2.5%. Oz Minerals pretty quickly dismissed it, noting it was opportunistic. I think that's everyone's initial response. $25 a share is where BHP were sort of pitching the bid versus Friday's close. So that last Friday, 7 days ago, was about $19 a share. So a nice premium, but down quite a bit. I think Oz Minerals, I don't know what their high was over the last 12 months, but I think it's certainly been higher than $25.
Yeah, $29.21.
Yeah, so that's
January.
$10, $11 from where Friday's close was. So maybe opportunistic, but I think copper is kind of what it's all about, and that's a massive component into the new world, we'll call it. So opportunistic, but why not have a tilt? We'll see where that goes. Just something that was really interesting is Jefferies downgraded CBA to a hold, and there are now no brokers, for what it's worth, there are no brokers with a buy rating on CBA. So no love from the broking community for CBA. And A2 milk down about 4.5% after the US delayed decisions regarding the importation of baby formula. So if you think that's going to happen, maybe it's a buying opportunity. I don't know. Anyway, so just that ongoing story. On to the US, the NASDAQ up about 1.5%, now down 19.45% for the year to date. We'll talk about this a little bit later. 43 stocks up. 43 stocks down more than 20% year to date. It was 42 last week, so about the same, and 21 in positive territory. The S&P 500 up about 2%, just a bit over for the week, down 12.3 year to date, up around 14.5 since the lows, which is interesting. Year to date, 145 stocks, or 29% down more than 20%. In positive territory. Far out, I'm all over the place today.
What's going on today?
139 down more than 20%. All right, US earnings, 1,690 companies have reported in the last week.
Out of the S&P 500?
Out of the S&P. It was about the same number last week. In the US. Not even US companies. Anyway, companies that beat. And I tell you what, if you're beating, you're being pretty well rewarded at the moment. So Unity Software up 24.5%. They beat. Berkshire Hathaway came out after market Friday, which they typically do. They missed on earnings per share, but beat on operational revenue. The difference there is, so in the US, you have to market your assets every quarter, and that goes into the P&L. But operational earnings, they still beat. They're up about 1.4% at $444,912 a share. Rob has a few.
Have you heard Warren Buffett's reasoning for not doing a share split?
No.
It's fascinating.
I think I've heard it, but I can't recall what it is.
Yeah, so he talks about their original investors in Berkshire Hathaway, and he talks about wanting to maintain the right investors.
Okay.
And not basically fractionalize the company. And essentially what he's saying is he doesn't want petty little shareholders holding the stock.
Well, it's costly, right? The shareholder register, if you've got more, it costs money.
But I think you got a lot of dicking around as well. Look at all the meme stocks.
Yeah, that's true. Their B share is like $400 a share.
Bargain.
Yeah. News Corp up about 9%. Lemonade up about 6%. They do insurance. Wix, the website self-design company, about 14.5%.
Wow.
Wynn Resorts up about 2.6%. Disney up about 10%.
What was that on? Theme parks?
Theme parks, mate. Yeah. They are back and they are firing.
Remember no one was ever going to go to a Disney theme park again?
Absolutely. You wouldn't want to catch COVID there. So not only are their theme parks fully open, their cruises are back. And their Disney Plus, all their streaming services. So Disney Plus, just Disney Plus, has 152.1 million subscribers versus 147 was the expectation. But when you add in Hulu and ESPN, there are 221 million subscribers, slightly more than Netflix's 214.
Yeah, I never looked at it from combined.
Yeah, so it's taken them 2 years to come from nowhere to, which is really impressive. Anyway, so they're just ripping at the moment. Lyft up about 3.75%. TripAdvisor up about 25%. Zillow 13%. Listings are holding strong over there. Square up about 2.8%, and Twilio up about 0.5%. Companies that met the trade desk, we were talking about this morning, up 43, almost 44%.
Who don't do trading?
Who don't do trading. It's all about advertising. And Atlassian, the Aussie company, up about 12%. And really quickly, companies that missed, Take-Two Interactive down about 3.5%. Coinbase, the crypto exchange, down 3%. Roblox up 5%. Jack in the Box 16%. Fox up 9%, even though they missed. Beyond Meat up 21%. So the expectations were pretty poor there. And SoftBank, the Japanese all investment company, down about 4.6% after losing $24 billion US, mostly on asset revaluations, which I mentioned with Berkshire. And the meme stocks are back. Rob, you getting on board? meme stocks?
I was on board last week with that AMDY we were talking about, 14,000%.
Oh yeah, that's right. Yes, out of Asia somewhere. But Bed Bath and Beyond up about 60%. Just
On what?
Reddit Wall Street bets expecting. I was actually reading. I'd never read one of their posts. I'm reading this bloke talking about it's undervalued. They got tons of stock. Someone bought in. He bought a bunch of stock. He must know something. So let's get on board.
Right.
What's the thesis?
Have you ever seen that meme? It's a Wall Street meme where someone makes a phone call and he's like, I won't do it now. I'll ruin the whole. I'll send it to you later.
Yeah. Okay. Maybe put it out on the LinkedIn. And emerging markets up about 0.6 for the last 5 days. Still down 14% year to date. Oil up bit under 4.5% for the week. Still up 25% year to date at $94 a barrel. And Bitcoin 5% over the last 5 days, down 49.48% year to date at 24,116. And that is it, mate. Look at that, 7 minutes for the match.
Yeah, well done. I wasn't listening to that last part because
or any of it, really.
No,
no question.
Just a normal day at the nation's most important financial institution. I'll put this in the doc for you, and we'll bring it up for our
loyal listeners.
Oh,
I love this one. Yeah.
Isn't that a classic? That's
awesome.
Basically meme stocks. What did it say? It says, I've got a stock here. There's a guy. So for those that are listening, it's basically a row of men and women in suits, and there's a conservative looking man in the far left-hand corner, and he's got a sort of little talking bubble, and he says, he's on the phone, and he says, I've got a stock here that could really excel. And then there's a guy next to him eavesdropping, and he says, really excel? And the next guy says, excel. And the third or fourth guy says, sell. And then everyone, it's just mania on the far right-hand side.
Just sell.
And it keeps going. And then one bloke goes, this is madness. I can't take it anymore. Goodbye. And another says, goodbye, question mark. Buy, B-Y-E, question mark. Buy, B-U-Y, question mark. And everyone's mania.
Bye.
And it starts again. I've got a stock here that... So that is...
Yes. No, I do like that cartoon.
Do we laugh at that because it's so true? Or why do we do that?
It's too true.
Okay. Is it my turn?
You're
my
right,
topic?
mate.
Yep.
You're on deck.
Let's do it. So this is, I think, the craziest recession ever. We're hearing on the news that we're in a recession. My cousin called me the other day. We're just chatting. He said, he's going to pick up pram that we've kept for him to go on his holiday. I said, mate, you can take the pram, it's still in the garage. And he said, how's things going? We're just chatting about the market. And he said, how we're doing the renovation of the house. He goes, I think I'm just going to pause it, just put on hold. I said, why? He goes, are we going into a recession? Are we in a recession? And so, the everyday person thinks that we're in a recession.
Well, that's what they're being told, right?
That's what everyone's being told. Yeah. And even the media is reporting, 2 consecutive quarters of GDP. We've had that, and so we're in a recession, and that inflation is killing the economy. And I ask, well, is it? And I just want to throw some numbers out to you. The first one, I've got a ton of charts, but I'm not going to bring them all up. I'll just bring this first one up here for us, which is the jobs added in the month of July. So the US added a whopping 528,000 jobs in the month of July. Do you know what the consensus was? $250,000
really?
plus.
Wow.
Is what economists had expected.
So more than double.
Just some other numbers there. I mean, you can see the trend, like from earlier on in the year, we had a massive peak in February, and then it was literally almost halved from there on in.
Yep.
There are now 152.536 million people employed in the US, which in fact puts that number above the pre-pandemic high of 1.52 million of February of 2020. The unemployment rate has now fallen to 3.5% from 3.6% in June. And again, that's the lowest rate since February 2020. Layoffs in the US remain low and job openings remain high, with a 1.8, almost 2 job openings per unemployed person.
Crazy.
And in the month of July, average hourly earnings jumped 0.5% month on month, and an acceleration of 0.3% growth rate in June, which reflects a 5.2 annual rate of growth for wages. And I reckon, I'm curious to know what you think, but I think this is why rates are going up, because this is causing inflation. Yes, we had supply issues. People had lots of money, and when everyone was free to go do what they wanted, they went and took that holiday. They bought that extra pair of runners, or they had too much money, and all of these things that we've come to know today.
Yeah.
And I reckon, and I'm curious to get your take on this, but for me, there are two things that are going to happen here. One is that the Fed continues to raise rates because we are still in quite a hot economy and a hot market. Or two, which we're going to talk about shortly, and I think you're going to talk about that, is supply catches up to demand and inflation continues to cool, as we saw yesterday. Was it yesterday or the day before that inflation numbers came out of the US?
Yesterday.
And so inflation's coming down, where rates are going up. Our rates are going up, and is inflation coming down because rates are going up, or is it because supply chains are being unlocked? And so I think there's these two things that are going to happen. Inflation is really cools down because supply chain, or the Fed just keeps foot on the gas and potentially driving this thing into a wall. What do you think?
I think both will happen.
Right.
To be honest. And we'll talk a little bit more about it later. And there's two things I find really interesting. We're back to where we were in 2020 in terms of unemployment, and we've talked about that's a massive driver for consumption and confidence and all the rest of it. And yet inflation is off the charts, yet it wasn't in 2020 or the start of 2020 pre the pandemic. And it's all because of supply chain, well, mostly because of supply chain. And so I think the Fed will want to see inflation fall for a number of months. You know, I don't think, and they haven't gotten too excited about 1 month.
Well, you got to start somewhere.
But you have, you start at, a trend starts at one, right? So it's potentially rolling over. I think the Fed are probably a bit nervous about the next couple of months of inflation, and we'll have a look at that in a little bit.
Nice segue.
Not want to jump ahead, but I think if we get a sequential fall, for the August number, September, October, November, then I think the Fed will probably back right off. And I think if you see that with the unemployment applications, the weekly job unemployment applications, whatever it's called, which came out last night, and that was up again. Not massively, but there's a bit of a trend forming there. If you see that unemployment number start to sort of turn over, I think that's when the Fed will start to ease up. But while employment's strong, I don't think they're, we're still, what's their target? 2 to 3%. We're sitting at 8.5%. So, there's a fair bit to go. But again, like we've said so many times, that a lot of this inflation is out of the reach of central banks. They can only do so much. And, a bigger benefit for inflation would be sorting out Russia and Ukraine.
Does the market seems to be front running all of this, right? I feel like the market's getting smarter and smarter as time goes on, and more people understand like the economics of all of this, and when this happens, then this should happen, and then that should happen.
Yeah.
And then you find the market went pretty berserk on the CPI day. I think it was up like 2.5% or something on the day.
Yeah, it was up really strong. It was. Yes.
Do you think the Fed, like after their announcements, turns around and goes, well, what's the stock market doing? How is the market responding?
Do you think they care? I don't. Maybe when times are good, they don't care.
But aren't they trying to? What they're trying to do is trying to tame this out of control inflation. And if people have a high degree of optimism, then yeah, sure, I'll go buy $6 head of iceberg lettuce because things are going to be okay.
Look, I think that confidence is a huge part of it.
And confidence is, we haven't added this. Confidence, if you look at sentiment, you look at business sentiment, consumer sentiment, now it's ticked up.
Yeah, okay. Yeah, we haven't looked, maybe we'll look at that next time. But that's a big part of it. And I think, think about all that news that was coming in, 3 months ago, interest rates are going up, inflation is off the charts, oil price or petrol prices are going ballistic. We've got a war, we've got this, we've got that. I mean, it's no surprise that sentiment was taking an absolute beating.
So sentiment went down from April 65, May 58, June 50 was the bottom, and we've climbed up to 51.5 in July.
Yeah, and I think we said the reality is that consumer spending will probably drop back from where it was, and that was going off the charts, and consumer sentiment was falling, and that will probably pop up and will fit somewhere in the middle. Because I think from memory, we were looking at historically, when sentiment's this low, we're usually heading for a recession or in a recession.
But also...
the question's still there, are we? But
well, no, we're not. Will we? Well, we're not. We
don't know yet.
The facts. You're asking, I think, will we head into a recession? We don't know that.
No.
But I don't think we had one, and I don't think we're in one right now.
No.
Well, clearly we're not in one right now.
We're heading towards one, possibly, but...
We're always heading towards one.
Yeah.
That's undeniable.
Yes.
Let's move on. And I'll hand the reins over to you.
All right, so US inflation. So I think it was Monday we had the New York Fed survey of consumer expectations of inflation, and this is something that they look at to see whether high inflation is being embedded in expectations, and then that feeds through to wages. And the chart's not great here. But the median 1 year, which is the blue, that's come off, and the 3 year expectation has fallen off quite a bit and almost back down. If you kind of unwind to this time last year, it's almost right back to where it was. So that's positive. But all eyes were on the big number that came out Wednesday, which US inflation came out at 8.5% annualized, which is a decline. And we'll bring this chart up now from Bloomberg, showing at the right-hand side there, the inflation by the black bars. So that's the headline number. The core inflation is the line there that you can see, and both have fallen. So the estimates were for 8.7 on headline, 6.1 core, and the reality is 8.5 and 5.9. So that's good.
That's good.
So inflation's come off a little bit, which the markets, as you said, rallied because of that. And I think everyone was just fearing that, what if inflation just keeps going up, but it hasn't. So my comment earlier about inflation expectation, let's jump down to this table here. So we'll bring this table up now, and this is showing inflation month by month, the annualized inflation from January 2021 all the way through to July of this year, the latest number. And the reason I said we'll see what happens in a couple of months' time, you can see with July 2021, the inflation, the annualized inflation was at 5.4, August 5.3, September 5.4, and then October, it jumped up to 6.2. So this time last year... So this is just comparing month by month from 2021 to 2022? Yes, the annualized.
Oh, the annualized at that month?
For that month. So the previous 12 months inflation ending in that month. So we went through, really, June, July, August, September, where headline inflation didn't really do a whole lot. But then it really spiked up, and that's 0.8 month-on-month change. From September to October last year. So I guess the point of bringing this up is inflation we have to get a number of components falling for us to not have an increasing inflation, because we're dropping off a fairly level period of inflation 12 months ago. So it's not like we're dropping out increasing numbers, we're dropping out flatline numbers. So we may get a little bit of a bump in inflation over the next few months, but it's that October number. And then you can see there, October, November, it went up 0.6, December, and then it really kind of spiked into this year. So the rest of this year... So what are you saying? I'm saying the next couple of months, you might actually see a bit of an uptick in the inflation, but it's the September number that I think is the key. Because it's such a high number? Big jump, yeah. October 2021. There was a big jump between September and October 2021. So conceivably, if inflation is running flat now, You might see a big drop in October. And then we'll bring up this chart here that's in the doc above that you've just said ignore. So
jumping all over the place.
This chart, I am jumping all over the place. Shows my organisational abilities. So this chart is showing the components that make up the headline inflation number. And I've just pulled out a couple of key components here. So food is the light blue that's kind of reaching for the sky there. Electricity is the next number down. Then we've got a purple, which is shelter. And then red, which is medical care services.
Does shelter include rent, or
Rent.
is that
No,
okay? So
rent.
is that rent and home prices?
Yeah.
Okay.
Yeah. And there's a lot of talk in the US that rent, I think the average rent across the states is $2,000 a year, a month, which is the highest it's ever been.
Yeah, but property prices are going down and rents are going up.
Yeah.
So I wonder if they offset each other, whether one has...
Yeah, I don't know. I suspect rents are going up because, well, there's a shortage and interest costs are going up. So landlords pass that on. But these are some of the key areas to look at, and they're not all of them. There's a couple of others, but food and electricity, they're the big ones driving it. I think new vehicles, which I didn't put in, but that's also, I think that's actually fallen. So we talked earlier this year, that was driving it. So that's sort of come off. And the baton's been handed to food and electricity. Maybe electricity starts to come off as oil prices come down.
Yeah.
But then natural gas is still going up. So there's a whole lot still kind of happening under the surface. But the initial numbers are starting to roll off a little bit.
2004, do you remember when food prices were going through the roof, and then in and around the emerging markets, Brazil and China and whatnot?
No.
What
was happening there?
So emerging markets were just really going gangbusters.
Right.
China was growing it in double-digit GDP.
Okay.
The commodity stock, BHP, Rio, they were just going berserk, and a whole bunch of financial institutions were creating, food, fuel type funds.
Okay.
And inflows were just... So think about a bucket that's being overflown. That's how much money was pouring into these things. And yeah, we all know what happened after that. Nothing lasts forever. But it's interesting to see food prices challenging the levels of growth that we saw in the early 04, it's actually 05, 06, pre-GFC actually.
Yeah. And I think a lot of that is driven by what's happening in Russia and the Ukraine. And the Ukraine have now been able to get out a number of shipments of grain, wheat in particular.
I wonder if your steak from where you had dinner last week came from the Ukraine.
We'll talk about that later. It's come from somewhere expensive. And look, just a couple of things to note. So following the inflation number, the Fed Reserve, the Fed chair, the Minneapolis Fed chair, Nell Kashkari, who was previously a bit of a dove, came out and basically said, look, the Fed's still got work to do. He wants to see the benchmark rate at 3.9 by the end of this year, which far out, that's aggressive, and 4.4 by the end of 2023.
Yeah, I read that. That
was interesting. And yeah, with all of that in mind, spare a thought for our listeners in Argentina, of which I'm sure we have thousands. So the Argentinian central bank or government, I'm not sure who runs it over there, they just raised rates to the highest level in nearly 3 years at 69.5%. That's their official interest rate, with inflation running past 70%.
So can we invest into term deposits in Argentina?
Mate, the currency's going to kill you, but go for it. Go nuts.
So they want to get to what? 3.9% at the end of the
3.9.
So what are we sitting at? 2.5 now.
Is that the official rate in the US?
225 to 2.5.
2.5.
So let's just call it 2.5. So we've got to jump
1.4.
Which is only 275 hikes.
Yeah, when you put it like that. And I think 75, you'd expect that next month. If they meet next month, they've got a break coming up, but I think 75 next month is probably expected. And maybe they run hard into the October inflation number, hoping that that's a fairly big decline. They do all the hard work pre that and just sort of then see what happens.
I just think about the dot plot and how accurate these Fed members are.
I mean, it changes every month, so,
Just take it with
how accurate are they?
with a grain of salt.
But anyway, so more rates to come in the US, more rate rises to come in the US, but maybe at a slowing rate in the not too distant future.
Yeah, do you think we're over the worst of it?
Ask me in October.
Oh, man, you just looking for validation. I'm calling bullshit inflation. I'm getting tired of this. Everything's going up.
Angry Rob is back. Look out.
Everything's going up, and we'll talk a little bit more about this. I've got some things to share in the tips and recommendations
So do I.
later on today. But supply chains are increasing costs. We can't get goods here. We can't get products here.
Yep.
And hence prices are up.
Going up.
And I'm saying I'm no more. I'm now going to push back and say this is bullshit. I'm not buying this.
So what are you just going to walk out, or are you just going to?
No, I will. I won't buy. So we're building, and
Yes.
when they tell me that aluminium prices have gone up this much and glass, I'm like, yeah, maybe a few months ago, but I don't think that's still happening. Or the cost of friggin' paint's gone up. It's like because we can't get air conditioning units. I'm like, I'm pretty sure I can find an air conditioning unit, man. Just give me a Saturday afternoon, and I'll find one. And so I think just this, people are busy, right? And so I feel like it's a big fugazi. Look, let's just let's tell Matt it's gone up. We'll just increase a little bit, and we'll blame it on supply chain. This is what is really going on. Give me one sec. I'm just going to get this up now. And this is from the New York Fed. So I'll get this chart up here. So this is the Global Supply Chain Pressure Index, GSCPI. I don't follow this regularly, but when I'm hearing far too much of this supply chain, I'm like, what is actually going on supply chains? And so what this index basically looks at, it looks at a whole bunch of things. So I'll just read from the New York Fed's website. It takes global transportation costs. They look at the Baltic Dry Index, which is shipping index, Harper Index, air freight cost indices from the US labor stats. And so it looks at trucking, ships, air freight, all of these things. It brings it all together and makes an index. Can you please tell me, Matt, what is happening on the far right-hand side of that chart?
It is freaking plummeting. Just looking at that, that's insane.
It is plummeting. And look, we can see the 2018, 19, 20. You see the massive spike in 2020, which is based that first spike on the far right-hand side.
Up to 3.9 in April.
Yeah, you see it decline and then runs hard again. That was, so I think we had COVID, it came back, and then we had Russia, Ukraine, bang.
Yep.
And so we're sitting at north of 4 standard deviations from the average value. And now we're sitting at just under 2. And so it's certainly, what is that? Almost half. It's fallen 50% from its highs.
More.
Well, yeah, more.
Yeah.
And so I don't know where I'm going with this, but fundamentally, I think people are taking advantage of price. I think it's price gouging going on. And
Absolutely.
I think people are starting to get a bit pissed off about it all.
Yeah, I think they are too. But let me ask you this. Let's say you own a cafe. All right. Prices are going up. You're getting some input inflation. I don't think there's any doubt
The
about
other
that.
thing, they're all charging now Saturday and Sunday rates. It's like,
don't get me started on
hold on.
Saturday,
That's
Sunday
the game
rates.
you're in. You're in food and
Yes.
hospitality.
So if you're now paying an extra $1 an hour and whatever else, like if you're running a cafe or a restaurant or whatever it is, are you not looking at it going, if I don't increase prices now, will it be easier or harder in January, I don't know, September, whenever?
And prices don't go down, so you have to take advantage of this. But I also think, and I'm not having a go at like the individual retailer. I think it starts from somewhere else where you've got suppliers who are now charging. I don't know. We can't get wheat anymore, so the croissants are going to cost $5 wholesale, and then it just has to keep going down the chain.
And everyone adds their little
That's right.
1 or 2%, and by the time it gets to us, it's
you can't have a go at the local cafe that's Do you know what? Admittingly, I don't know if anyone from Duke's Coffee is listening here, but Duke's Coffee, come on, man. Like, your prices have not changed. And I love that, but they haven't changed. How?
Maybe that tells you how high they were. How do their prices compare to, I don't know,
they're cheaper.
other places?
Bizarre.
Oh, really?
But maybe they're working on volume. I've got no idea. But anyway, I'm calling a bit of bullshit inflation. I think we're getting to a point where people are now getting sick of it.
Yeah, absolutely. No, I completely agree. We will elaborate further in tips and recommendations.
And
you've got next.
I've got the next one.
Yeah.
And so I want to talk about the death and the resurrection of the 60-40 portfolio. And so for those that are not familiar, the 60-40 portfolio is it a balanced? The balanced portfolio. It's typically
really
the
balanced,
rule of thumb mix of investments that typically the US use and most.
I think the MySuper default is a 60-40.
Okay, so it's a rule of thumb portfolio. 60% of your investments are in risky assets, stocks and property, and 40% of your investments are in defensive assets. So think cash, term deposits, government bonds, corporate bonds, and things that are more defensive in nature. Do you remember everyone was talking about the death of the 60-40 portfolio?
Yeah, only a few months ago, right?
Yeah, so what happened was, at the beginning of this year, in the first half of the year, not only were stocks plummeting, so too were bonds because interest rates were going up and therefore bond values were going down. And so investors are sitting there. Bonds are supposed to diversify your stocks and your stocks are supposed to diversify your bonds. But no one ever talks about the fact that they were going up at the same time last year. Everyone just worries about them going down. Yes. And so they were going up together for a period of time. And now they were going down together. And it's something that doesn't happen frequently. In fact, I think it's happened like 3 times in the last 70 or 80 years or something like that. So it's a very rare occurrence.
Yep.
And my question is, how many times do we need to ask ourselves this question about fundamental investment concepts just with a wave of a magic wand and something that happens at a particular point in time kills hundreds of years of evidence? So I want to bring this chart up. This is from Meb Faber, and what it's looking at is, just give me a second, I'll explain this to you. It's looking at the top and bottom 5 years of US 60-40 portfolio returns from 1800 to today. So what is that? Like 220 years of data?
222.
222 years. Oh, there, it says it in the chart.
There,
222 years of data, and each of those lines you can see the years where the 60-40 portfolio had its worst and had its best.
Right.
And so have a look at 2022. It's sitting on the bottom right-hand corner in that orange-brown colour.
Yep.
And what that's showing us is it's the second worst decline in the first half of the year, so January to 30 June, in the last 200 years.
Yeah. And like you said, it's a rare...
Super rare.
occurrence.
1, 2, 3, 4. It's literally this.
So they've got the number there, 43 between 0 and -10, 5 and 1 between negative.
Where are you
10,
looking?
negative. So on the left-hand side, those numbers. So it looks like in 222 years, there's been a total of 49 occasions where the 60 portfolios had a negative return.
Yes.
Over the first half of the year. Is that right?
On the first, so January to end of June, first half of the year. Correct.
Wow. Okay.
And so the -20 to -30, it's only happened once. The -20 to -10 has happened 5 times, and -10 to 0 to -10 has happened 43 times.
Mm-hmm.
And so this particular occurrence is the second worst. And so because of all of this, everyone basically lost their shit and said, that's it. You can't diversify portfolios anymore. Do you remember when in the GFC when everything was just shitting itself? You couldn't diversify.
Mm-hmm.
You couldn't. People were
nowhere to hide.
People were withdrawing money out of banks because
that's right.
I mean, it was crazy. Do you remember the photos that were coming out of Europe? People lining up outside of the Irish bank for days trying to get their money out.
Yep.
And so stocks and bonds correlations went to 1. You couldn't hide anywhere. And this is what we've seen over the course of the last 6 months as well. Now, the reason why I want to bring this up is because if once you look back at history, and I think last week we made a comment that we don't have dusty history books here because we're constantly looking at them. But what is really interesting is this. So this is the second half of returns of the year for those same 60-40 portfolios after the 10 worst first half returns since 1800.
Yep.
So those lines and those negative performances that we saw, what happened? Sorry, the top 5 best performing and the top 10 worst, or top 5 worst. Here's how they performed after. So the worst performing one was 1932.
Mm-hmm.
Look what happened the second half of the year. So the first half, it fell 26%, the 60-40 portfolio. The second half, it rallied 39%. 1970, first half down 20%, second half up 23. 1877, down 13, up 12. Can you start to see a trend here?
A little bit. Get on board. That's what you're saying.
So Man Group were there. So quote, in the 10 worst H1s, excluding 2022, average performance was down 12%. For the corresponding H2, the average was plus 10%. And the positive hit rate was 90%.
Yeah, wow. Okay. Pretty consistent.
Pretty consistent and pretty accurate too.
Yeah.
In 200 years. And so the reason why I'm showing you this, and for listeners, is that I've got this fundamental belief that money and risk and the market will always find a home. Will always find a home.
Yep.
And this concept of you can't diversify anymore, I think in the short term that may very well be true. But I know history tells us that just it hasn't happened. It doesn't last for long periods of time.
No, it doesn't. And we're so quick to judge. You know, everyone gets on the same side of the boat so quickly. The fear of, I don't know, being the odd one out. I don't know what it is, but no, I agree. It's that short term. And I've observed this and commented on this before, that the market movements are so much more almost erratic. Like markets move a lot quicker and a lot sharper and a lot further than they ever have before in terms of...
Do you mean like on the downturn or on the up?
When the market rallies? Look, think about COVID. Think about how quickly that fell and just how quickly that recovered. I mean, it was almost just absolute bedlam. And the fall this year, you know, based on interest rates rising and inflation, and maybe it's justified, I don't know, but I just feel like that there are so many people in the market all reacting to the same data at the same time that market movements are just getting exacerbated in shorter and shorter time frames.
But I think during COVID, people didn't have time to respond or react, really.
It was just sell and I'll worry about it later.
Whereas 2022, people have just had the fear instilled in them and ingrained in them from wherever they looked.
Yep. Yeah, no, it is interesting.
And it's like been prolonged. It's like torturous for 6 months.
So how do you think 2022 second half will stack up? Do you think, and we've already had a pretty positive start to the second half.
I'm going to say there's a 50% chance that we're going to be up 10%.
Okay. And 50% chance we're up 20%? I mean,
no, 50% chance we're not.
Oh, okay.
I will just take history as a guide, right? And that's all I'm taking. You know, you talked about numbers earlier on, and we were chatting this morning. S&P 500 up almost 18%, 16%. Nasdaq from its June lows up almost 20%. No one's talking about a bull market from the bottoms.
No, well, not yet. They will be shortly.
Well, who knows? It's still a dead cat bounce apparently. And there's so many folk coming out now, like advisors and whatnot, talking about that equities are a good buy, but.
Where were they 4 weeks ago?
They're a good buy. Oh, but there's a second. We think there's a second leg down. It's like, how do you know that, right? Of course, we're going to have some sort of recession. Who knows when it is? We haven't had one. We're not in one right now. S&P 500 have just in every. There has never been S&P 500 companies making record EPS in a recession, ever.
Like never.
Never.
Wow. Okay.
That's fact.
There you go. You heard it first.
Heard it here first.
So we're definitely not in recession. I think that sorts it out.
That's it. That's the the nail in the coffin. We're not in recession. Are we going to be in one? Yes. We don't know when.
All right.
Let's move
on. So I'm going to talk about the new bull rally just because no one's talking about it. All right. So from the low, so let me just kind of walk through this. So the NASDAQ on...
Are we bringing any charts up or are you just going to set it up first?
Let's set it up first. I'll let you know. So Tuesday following the release of the CPI number, the NASDAQ breached the 20% rally number from the very low, which we had on June the 16th. So the bear market started June the 19th, 2021.
Okay. Is that we were down 10% then, were we?
No, because that was the peak.
Oh, that's the peak.
I think so.
Okay.
According to Bespoke.
Okay. In what index? The NASDAQ?
NASDAQ. So, so it said that the bear market rally, or the bear market ended on Tuesday, which began November the 19th, 2021. And which was interesting, they comment just how average the bear market was.
I can verify that Bespoke are right.
Okay, good. Good job, Bespoke. So November 19,
peak.
2021 was the start of the bear market. June 16, 2022 was the end of the bear market. Now, from peak through trough, the NASDAQ fell 33.7% over 209 calendar days. The average bear market since 1970, negative 35.5% over 201 calendar days. Like that's
average.
This is just normal, right? It's crazy.
I feel good about my second half prediction for an average return.
Absolutely. So let's bring up this table now. There's a whole lot going on, but basically what it's doing is showing NASDAQ bull and bear markets, 20% rallies and declines from a closing basis.
Oh,
so
right,
it's
okay.
showing, 1973, 78, all the way through to 2021 when it started, 2022 when it ended.
And this is since 1970?
This is since 1970.
Okay.
Yeah. So the decline, so the average is 35, as I just mentioned. The median is 33.3. The max being the smallest, min being the largest, 59.9% was the largest.
I would have categorized them the other way around.
Yeah, so would I. That's why I paused there. And the number of days, so the average median's 120, average is 201. So then we go on to the subsequent bull market.
Interesting. Okay.
It is interesting. So the average, I won't go through all the numbers for obvious reasons, but the average is 135% gain over 841 days. So we've talked before how the markets go up more than they go down, but they go down faster than what they go up.
What's the saying? The bull market takes the stairs up.
Take the stairs up and the elevator down.
takes the elevator down.
Yeah, which I love that. It's great way of analogy. A great analogy. Anyway, so what are we? 55 days into this. So if on average the market holds true to form, we've got a long way to go. A long way to go. Now, obviously, not everything is the same. So the maximum upside we have is 539%, and the smallest bull market that we've had is 24.8%.
That was during the tech wreck.
Was it?
2001.
I was trying to quickly find it. Okay. So
what are you saying?
We've got at least 4% to go. Is what I'm saying.
We've got very bullish.
So basically what I'm saying is that the bear market that we've gone through, that everyone was freaking out about, constant barrage of the world is ending news. At the end of it, it was just average.
Did the market get it wrong?
Kind of what it was.
Did the market just price? I mean, you went through a whole bunch of beats and whatnot earlier on. Like, did the market just oversell earlier on, and then it's realized it's just correcting back to where it was?
I think
where
so.
It should have been.
Yeah, and I didn't mention, but we were talking about this morning that there are a lot of companies whose prices are up 40, 50% from the lows. And granted, they might still be down 30, 40%, but they were down 70%.
I think you're saying Netflix is up almost 40%.
Yeah,
from its
Netflix
lows.
is up quite a bit. Peloton's not. But Zoom and the Trade Desk and a whole bunch of other companies are up quite strong. Even the big tech, Apple, Microsoft, Google, they're all up, pretty nice numbers from the lows. So I think the market overreacted, which it normally does during the negative times, to the downside. And now it's recovering, and maybe it's already overreacting. We won't know till kind of it's happened. But I guess for those that are out there waiting for the bottom of the market, it may have been 20% ago. You may have missed it. There may be another decline coming. We don't know. And this is why you invested long term. This is why you keep investing, and you don't worry about day-to-day ups and downs.
And I think it's also why you invest progressively without trying to pick bottoms or tops.
Yeah,
it's just
100%.
Religiously. And the best thing to do is just automate, because we're all human, and we will find some reason to do or to not do something.
Yep. It's our biggest flaw, is being human, really. So if this current market gets to its median return, we've got about another 43% over the next 430 days.
So we've got potentially till the back end of 2023 to run, and we could get close to another 50% on your money before we hit the recession and it all hits the fan.
Based on historical numbers.
That's interesting because... can I just get my crystal ball out?
Yeah, go for it, man.
So if the Fed's talking about peak rates at the back end, is it Dudley talking about 2023?
No, with someone else, but yeah.
Whoever it was, talking about 3.9% at the back end of 2022. And then what's the federal funds rate of 2023?
4.4.
So 4.4.
Yep.
When do we have recessions? When rate hike cycles peak, not when rate hike cycles begin.
Yeah. Yeah.
All right. Can we draw a line in the sand? Bull market for the next 14, 15 months.
We're up
43%, and we've got a recession. Hey, there's your 2024 recession.
Boom. Look out. You never knew. Never knew how right I was. Anyway, I was going to bring up this last chart, and this is just how markets perform when the CPI is decelerating. So on the top part of that chart, the dark blue bars are months where year-on-year CPI is down versus 3 months ago.
Gotcha.
Yeah?
So CPI is falling.
Yep. And months where year-on-year CPI is up versus 3 months ago. So when CPI is falling, previous month, next month, 3 months, the whole way through, the market does a lot better. So, I mean, this is nothing new, but markets do better when CPI is falling because there's less risk of, central banks raising rates and all the rest of it. And then the bottom part of that, which I found slightly more interesting, months where year-on-year CPI is below the 12-month high, and months where the year-on-year CPI is above or at the 12-month high. The next month is probably the anomaly there, but where it's below the 12-month high, which we are now, markets tend to do really well relative to when CPI is at, is still growing and is at its 12-month high. So this is why inflation is such a key number. This is why we keep banging on about it. It drives so many things. So, if we do start to see that inflation number, sequentially fall, we could rally quite a bit from here.
Confirmation bias, potentially? Just verifying our
absolutely
our views.
We're just cherry picking data to validate what we're saying. But yeah, look, things look all right.
I'm pretty optimistic going forward, but that doesn't last forever. Should we get into director's cuts?
Absolutely.
All right. I've got a few here. New York Post had a headline. Let me read it for you. Oh, poor thing. Yacht owners moan they're getting hit by stubbornly high diesel prices. So these guys, so quote unquote, quote, it used to be $2,500 to take my boat out for lunch, but this year it's going to be $5,000.
Oh, poor bastard.
So, I mean, it's somewhat comical. But anyway, I thought
we're all feeling it.
I thought I'd throw that in there for a laugh. Did you see or know Starburst is now discontinued in Australia?
What?
Yep. No more Starburst. Literally,
Wow.
This is like 2 days ago.
Wow. Why is that?
Distributor confirms declining popularity and, wait for it, supply chain issues.
Hey, who would have thought?
Led to the fruit chew's local demise.
Wow.
Supply chain issues.
Give me a break. Make it here.
Etienne Klein. He is a scientist somewhere. I don't know. I picked this up on Twitter. This is fascinating. Did you see this?
Only when I was reading through the doc.
Photo of Proxima Centauri, the closest star to the sun, located 4.2 light years from us. She was taken by the, I don't know what the JS.
That's that new.
Oh, right. This level of detail, a new world is revealed day after day. What do you think about that?
That's mental. I just can't wait till we find another inhabited planet. I really can't, because maybe we'll stop fighting each other and just...
I'll bring this up for viewers to see it as well. So there's a lot of commentary on social media about it. He came out with a confession. He said it's a photo of a salami.
Did he?
On a black background.
That's pretty cool. Yeah, it is too.
It was a salami stick.
Nice.
And yeah, he said he said that it got out of control, so he had to come clean. People were just going wild and crazy about it. But
that's so funny. But those photos that we saw a couple of weeks ago, that the satellite.
People were bashing those photos, talking how their iPhone, whatever, can take better photos.
Fuck off. But it's just cool. I love science.
Do you? How do you
planets, space.
Oh yeah, I love that.
It's fascinating.
Mind-boggling. It's actually mind-boggling.
We're so small and insignificant, despite what we all think.
That's not what we think.
No. All right, so I got this next one. US home supply soars. So the inventory of listings increased at a record rate in July. So this is the annual change of active listings in the US. And I think I mentioned earlier, Zillow came out with pretty decent numbers. Certainly the stock rallied, but it looks like we've talked about the high demand and falling, rising prices and falling demand in the US. Prices are starting to roll over, and that supply is really rocketing up as well.
It's interesting because that's not what's happening in Australia. Like, as prices are falling, like
supplies,
you just don't have the abundance. Like, the abundance of supply was during the boom and peak time. But anyway, let's keep rolling.
Yeah, which is interesting. And so this one was really interesting, and we'll bring this chart up here. This is from our friends at Bloomberg. So the blue line there is the S&P 500, and the white bars are the quote-unquote new bull market story counts. So this is the number of times that a story published, I think it's both newspapers and online, mentions the new bull market. And obviously there's quite a bit. And so as the number of stories talking about the new bull market increase, so does the market. We're all following the same stuff. We're all reading the same things.
We shared the meme at the beginning of the podcast, right? Yeah. Buy, sell, sell. It's how it works.
That's it. And then the last one, which goes back to your comments a while ago about Kathy, what's her face?
Wood.
Thank you. From ARK Innovation Fund. So this is, I hadn't seen this before. Maybe you'd shown it. Maybe you hadn't. So the ARK Innovation ETF from 2016 to now versus the .com bubble. And I was just shocked at how tightly correlated these two were or are. Even the rally, the rally timing.
It went up, it peaked, and it shit itself. And
okay. So let's assume that we're in that. So see where the orange line ends, and the .com bubble market, the Nasdaq, was rallying at that time. Are we in that same sort of rally now? Because we've looked previously how this rise and fall has mirrored, and I guess you could say as indicated by ARK there, has mirrored the .com. So are we in a rally to fall? Like, are we going to keep following this?
I don't know.
Come on, man. Have an opinion.
I told you my opinion. My opinion is
up.
Is that we're
50% chance of being up 10%.
We're in a bull market
this second half.
Yeah, I reckon it's been overdone what we've gone through for the first half of 2022. I think we're going to have a pretty good year for the second half. and my crystal ball doesn't look further out than 6 months.
What makes us go up and back down is if the Fed don't ease up on rates. If they just
But we just talked about that. We just said that when recessions happen, when interest rates peak.
Yeah, I think they peak at after the start because they're slow to react. Anyway, that's it. That's all I had.
That's interesting. Let's get into tips and recommendations. What do you got for us?
Boy, look out. Squire's Loft. Far out. So, Saturday night, my mum was down watching the kids. My wife and I went out. We had a charity thing at the school. But we decided to go out and grab a drink and just a quick little something to eat before we went out. We went to Squire's Loft in Nunawading. And went to the bar. We were sitting at the bar and it's kind of like, what do we want? Nothing big. We'll get this beef skewer with chips, $17. I'm like, okay, that's fine. I'm willing to wear that.
Must be good.
Couple of drinks. Man, the chips were good actually. But anyway, it comes out. It's one beef skewer, no chips. I said to the waitress, hang on. We're meant to get some chips with this. She's like, oh, no.
Supply chain issues, no chips.
Couldn't make it from the kitchen. They've been held up somewhere. So I went up and kind of just questioned what's going on. And they said, oh, no, that's the lunch menu. The dinner menu's different. I'm like, okay, whatever.
Why did
Can
they
I
give
get
you a
some
lunch
chips?
menu?
Fuck, it was all in the one. So the front page is lunch.
Yeah.
And, so I said, all right, that's fine. I'll get some chips as well. And that was whatever it was. And then as I was about to walk away, I was like, what did I pay for that skewer? And I've already told you this. $23 for one fucking skewer. Like I was just sitting there going...
Did it have any vegetables on it? Like, how they put...
It had a little bit of lettuce underneath it. So it was just like...
So it wasn't like a kebab where
they've got vegan's nightmare. It was just like 8 cubes of beef skewered.
It must...
on lettuce.
The beef must be from
$23.
The Ukraine.
Freaking from... I don't know. A planet we're yet to discover. Anyway, bullshit inflation. Man, I was not happy. So we left it at that and left after we'd eaten. It was nice, to be fair, but $23 for a skewer, man, that's crazy.
I think
out of control.
It's the timber on the wooden skewer that's gone up in price. Oh, metal.
Reused.
Oh, well, aluminium's gone up.
It's gone up even more, right? Come on.
All right. Well, we went out for dinner as well on Saturday night with my wife and the boys, and it's a vegan restaurant, and they had a great extensive menu of pastas and pizzas and whatever. So I got a pasta, and it was a linguine, olive oil and garlic, just pretty, and it had some. Soy-based prawns, right?
Okay.
And that was... I had a look at the menu. It was $31 or $32 for a bowl of pasta. I thought, okay.
Could have bought 1.5 skewers at Squire's Loft.
Bought a bowl of chips and I think that was $11. Anyway, we got the whole thing, and my pizza hadn't come out, and it was $18 for just a basic pizza, like just cheese. Oh no, it was a Hawaiian, so it had like cheese, and pineapple, and
super expensive.
Yeah, I think pineapples grow in Russia. No one knew this until
now.
It was $18, and I thought, all right. And the bowl of pasta came out. It was really small. I thought, what a rip off! $31 for a small bowl of pasta. The baked potatoes came out. It was $11. Literally, there was like 3 or 4 chat potatoes in there. They were cut up into like 1/8. Deb ordered a grilled mushroom salad with like 2 slithers of mushroom on it. And then I thought, all right, that's fine. The pizza will come out and the boys will have the pizza and we'll be done. And I haven't eaten anything by this time, so I'm cracking the shits. I'm like, hangry. Pizza comes out. Brilliant. Look up to the waitress. She puts it down. It's a fucking, like a pizza you'd get at Domino's, like a small pizza. It was $18. She literally placed it down. And I was that shocked that I just looked at her and I said, oh. And she just looked at me. And there was this awkward silence. And Deb said, you do realise how obvious you were. And so we wrapped it up. Deb and I said, that's it. This is bullshit. We're not paying. For like, it was the bill was ridiculous for what we had. We were starving. The boys went home. They wanted peanut butter sandwich. So bullshit inflation, just eat at home, make a bowl of pasta at home.
Nothing is more disappointing than going out for dinner and you're still hungry.
It's the worst.
What was the point?
Second tip, I started back doing jiu-jitsu last night.
Oh, look out.
And I think I've sprained my thumb.
Oh, really?
I can't move it.
Man.
So I don't know what it is.
Took one night. So what's your recommendation? Don't do exercise.
Don't eat out and don't do jiu-jitsu
Exercise at
when
home.
you're on the edge of 40. Mate, I was rolling with this guy. He was huge and he had the longest arms, longest legs. And at the end,
you don't?
No. And I said, mate, how old are you, man? He's like, I'm 16.
Oh, are you
and
kidding
I'm like, shit, this guy ruined me. So
Too funny.
there should be categories for 40 plus and under 40.
Sub 40.
Anyway, that's it. You got anything else, or we're wrapping up?
We're good.
All right, we're calling bullshit inflation. We're calling a bull market. Inflation's going down, and we might have another leg down in the NASDAQ based on Matt's ARK Innovation ETF. So let's wrap it up. Hit us up on YouTube, Spotify, Google Podcasts, and Apple Podcasts, and we'll catch you next week.
Cheers, guys.
My name's Robert Baharian, and I'm the founder and CEO of Baharian Wealth Management, AFSL 526798. The information contained in this podcast by me, my colleague Matt Rigby, or any of our guests may include general advice and does not consider your personal circumstances. You should seek personal advice from a registered financial advisor who can consider whether the general advice is right for you.